There are probably several instances in your own lives when you've spoken to someone older than you and they've very strenuously argued in favor of buying a house. They say that it creates your own physical asset, there is security associated with it, and then there's the emotional well being that you feel when you go and live in your own house. But there is also a case to be made against buying a house, especially early in your career. To talk about whether it's absolutely essential to buy a house, I have with me Anil Rego, who is the founder and chief executive officer of Right Horizons. Thank you so much, Anil, for taking the time. And this is a bit of a tough conversation to have. It's not something that has a very straightforward answer, because in India, more than anything else, you have gold and you have real estate that is valued very highly. But from a financial standpoint, from good financial planning, I want to know, is it absolutely essential to own a house?
Yeah, so if I actually look at it from a completely from a financial perspective, uh, and we did compute the numbers as well, to validate that, and probably I'll share that over this conversation. Actually, it does not make sense to buy a house at certain stages of one's life, and that especially is at an early stage when, let's say, you buy a house which is disproportional as an asset versus all your other financial assets. If you are, say, further in your journey and you have a large asset base, as part of it, you want to buy a house, then that may not make as much of an impact. But at a time when you are in your wealth creation journey, right, and early stages when resources are scarce, you go and pay an EMI and you pay interest on that. It robs your ability to be able to, say, invest in an SIP or a mutual fund. And when we calculated the numbers, interestingly, it threw up certain surprises. So I think at an overall level, just to summarize, I think it doesn't make sense to look at investing in a house. A lot of the time, it's an emotional decision that one takes because maybe it's come down from our parents, and we are used to it. Sometimes it gives us safety and comfort as well. But keep in mind that it may increase risk for you because of the home loan that you take and the liability that you bring on yourself and your family.
There are various aspects to unpack in this entire conversation, and you've mentioned a few, but let's focus on this statement that it brings you security. Uh, what I want to understand is you're creating a physical asset, but you're taking it on loan. It's essentially it's hypothecated to you, and the bank is the owner. You're repaying a certain amount of money every month, and once you've completed the payment, you then are the full owner in the rightful sense of that property. Is it then true to say that there is security associated with buying a house, especially if you're taking it on loan?
Actually, no, because, and let me give you an example, and that's the best way of going about it. Recently, we came across, it's a very unfortunate incident where a person whom we, in our layout passed away, and there was a loan on it, right? So today the family is now, has to grapple with having to repay that loan. Unfortunately, there was no term cover which was there, and insurance cover to sort of cover the loan as well, and that becomes a very moot point, that you have a real issue. And assuming that even one doesn't see such an extreme situation, right? If your asset value is, say, 1 crore, and I've taken a loan of 80 lakhs, actually your net asset is only 20 lakhs, right? And over a period of time, it grows in terms of an asset. So I think people have a false feeling of security, without looking at the numbers.
Aspect that comes up is the level of appreciation of real estate. They say land is the scarcest commodity, and in a sense, real estate is an extension of that. There's only so much available, and therefore the value is expected to only keep rising. The argument for buying a house early then is to reduce the cost that you would incur in the future. Is that a flawed argument, and why?
See, maybe in the past, real estate has delivered much stronger returns. And from that perspective, yes, if the asset is growing fast and your cost is, say, lower than your growth of your asset, then so you are creating, an additional asset base for yourself. Okay. But in recent times, we've seen that the growth rate of real estate has come down substantially. And one cannot take it for granted that, say, real estate will grow at 12% plus. Okay, and this is all in the current scenario where real estate is scarce. Okay, I think population has grown, etc. And one keeps in mind that that not necessarily stays the same all the time, right? If one looks at there are trajectories of, let's say, growth in population, and you're finding that more mature economies, for example, are having the other problem that they're having more seniors than younger people. So I'm saying that that cannot just be one basis for you to look at it. Yes, there could be other assets which are also scarce. If I go by the same logic, right from commodities to other assets, but at the same time, you also have diversification, which could mean that if I look at, say, financial assets, they are continuously improving, because let's say if you're investing in a stock, for example, and an index, that index is continuously improving. It's throwing out companies which are not doing well, and it moves on, and people have to fight up and keep creating value for the stock price and market to grow. So there are different ways of looking at it. I think just saying that scarcity as a basis of making that decision, I don't think is can be the only criteria.
Argument in favor of buying a house that is made is that it's a great investment. We've heard this in dinner parties where property was bought, say, in 1992 or 95. The value was a few lakhs then. It is now worth a few crores now. And because of the mammoth increase in or the difference between the acquisition price and the current value, you tend to imagine that this is a spectacular return. Is that also a flawed perception?
Yeah, so but I also think it was something a little bit more of the past, and we actually saw good growth in, say, real estate. Now, is that the only avenue which has done very well? Not necessarily so. So if I look at the Sensex, for example, and the Sensex index starts at 100 and it started in 1979, and assuming that assume a round figure, say 50,000 of the Sensex, right? So which means it's gone up 500 times from 1979 to today. Okay, so the question is about whether I invest into assets, I let it grow and let it compound. Then we need to see what is relatively a faster compounding asset. Okay, and globally, studies have shown across countries and across longer periods of time, say, fixed assets like real estate have grown slower than, say, financial assets. Okay, especially equity-oriented assets. So one needs to, I think, look at a slightly broader perspective, educate oneself on various assets. But at the same time, I'm not saying don't invest in real estate. I'm saying look at it maybe as a diversification. Look at it when you can afford it. If I'm buying real estate and it's, say, 15% or 20% of my portfolio, then that's fine. But if I'm buying it and it's 70% of my portfolio, that's where I'm coming heavily against it, right? And a diversification, okay, good to have, but not the significant asset base or very high skew, along with taking risk on yourself with a loan.
It's interesting that you point that out because I'm sensing that you say that you need to differentiate between buying real estate as an investment and buying real estate with the intention of staying in it. But to talk a little bit more about the numbers that you're speaking about, there are studies that suggest that at various stages of life, you need to be at a certain corpus if you are to take care of your retirement. There are multiples of 2 times your annual income at a certain age. I believe at around 30. We did a show recently where we talked about that. And the argument that I have, or the question that I have, is that if you are a 30-year-old, you're earning 15 lakh of rupees every year. If you have accumulated 30 lakhs of rupees, and this is a nest egg that you want to build over a period of time, if you're in a place like Mumbai and you need to buy a property, you're talking about buying a property that's worth at least 1.2 or 1.5 crore, and if not more. So you put the entire 30 lakhs into your down payment and you pay an EMI for the rest of what could be 15 years. The point that I'm trying to raise, or the question that I'm trying to ask, is that a terrible idea?
Yeah, actually, if I looked at the numbers, and here let me give you an example. We looked at a round figure of buying a property of 1 crore, and that we assumed only a 20 lakh down payment. Okay, and we assumed interest rate of something like 7.5%. Now, if it goes up, the situation will get worse for it. We looked at property growth of somewhere around, let's say, 7% or so, and so if I looked at something like that, and versus putting the same 1 crore renting using it or renting out a house at say a 2.5% or so rental yield, okay, and paying rent. I also increased rent at say 3% per annum, okay, and so it was a growing figure, and we did all of that, and it was interesting to note that almost like the difference was depending on how you looked at a few parameters anyway, between 60 lakhs to 80 lakhs or so higher if you actually invested it out and you also bore the higher rental cost year by year. Okay, I assumed say a 12% type of return on, let's say, the SIP that you've invested into. I didn't assume it completely equity and high risk equity at 15%. So I assume, you do a combination of mutual fund SIPs, and, you'll probably have built, that much more. And this is over what we computed over a 15-year period.
It's important to stress the importance of what you have just said, because if anything, you've underestimated the rate of return that you can get on investing consistently. You've overestimated, in a sense, what real estate can yield you. 7% is not something that we've seen over the last 6-7 years. We've seen something more like 4%, sometimes even less than that. And we're also talking about something that you own yourself. You're not likely to sell the house that you're living in simply because the value has gone up, unless you're moving to a bigger place, in which case you will have to deploy capital again. So I would like to come to the next point, which is, you say that you need to understand the factors behind buying a house. What are those factors? At what point can you decide that you may be early in life, but at what point can you decide that you can go out and buy a property?
Yeah, so I think a safe thing to assume is that if I'm also able to diversify, if I'm able to do my real estate and I can also diversify and, let's say, invest in an SIP and other financial assets, and say real estate, is not forcing me to take a very high loan and create liability on my family. Okay, because see, why also the investment works better is because you're not paying that much of interest, right? So in the example that I gave, a crore would result in almost like you making 1.5 crores of payment including interest. So that that takes away a good part of your return. So that is the whole point of where you need to look at it at a slightly wider perspective and then compute for yourself. So when can somebody, look at it, and what maybe is the tipping point for one? So possibly if you've built up a certain financial assets as a backup, if you don't have to take too large a loan, sometimes say you may get a windfall, some ESOPs or something else, money comes in, okay, or you sold some land and utilized some money from that. So you can actually look at investing in real estate if I think, just as a thumb rule, I can say, you're able to put, say, 75% of your assets into, let's say, diversified assets, and keep your real estate restricted to about 25%.
And that's practically impossible if you're talking about buying a property in Mumbai for most people, unless they've reached a certain scale in their lives. So effectively, we're talking about waiting for a while and deferring your purchase of a home till you achieve a certain scale. But the other question that I have, and you've talked about the opportunity cost. You said that if you don't buy a property, if you live on rent at a rental yield, again, I forgot to mention, you've said 2.5%, but 2% or less is what you see in several places as well. What is the cost of owning and maintaining a flat? In your experience, in your conversation with people over the years, do people tend to underestimate that cost?
Yeah, so in fact, in my example, I've not even considered that cost, right? So, and if I have not done it, probably most people also underestimated themselves. Okay, so and true, because I have seen that over the years, let's say, especially after the first 3, 4, 5, when you go to 10 years, 15 years, the maintenance cost also goes up. There may be, if you're buying an apartment, the maintenance you're paying to the apartment owners association, so all of these are ancillary costs. When you add up, it may just get a lot more worse for you.
Another argument, and I've heard this quite often, and people are very helpful with the examples that they give me as well, is that I'm 63 years old. I've got one property in Vasai. I've got one property in Virar. It gives me a rent of such and such, and I don't need to worry about a pension because it takes care of my daily needs. From that perspective, do you think that real estate can be considered, or even there, would you say that financial assets are better?
No, especially for retirement, I think using real estate is not a good idea at all because of the low rental yields that it gives. If you are bought a property and gave it out on rent, now the issue is that it may not be growing in line with inflation. Okay, maybe the property value may also go up, but your rent over a period of time you will find shorter, and for the same monthly income that a financial asset may give you, you may have to invest that much more, okay, in real estate, and it may not catch up with you now, it will catch up with you later. So that is maybe for a senior person. In fact, for a junior person, I'll say the other is the opportunity cost of where you've missed out this, let's say in the example I gave, that 60 to 80 lakhs in a very critical part of your asset building. Now if you did that, possibly in a later date you could put down this additional 64 lakhs and use it at down payment, and maybe top it up later on, and that time it may be possible, but you may just miss out even for a younger person.
So, in conversations that you have, and I'm hoping that you can tell us about the younger people that you've met as well, um, do they buy houses or tend towards buying houses at to the detriment of the rest of their financial goals? Do they say that, look, I have plenty of time before I retire, I can start saving for my retirement later? And how much of an implication does that have on their final retirement savings that they have?
Yeah, I expect the buying of houses by millennials to actually be much lesser, over a period of time, because they may not want to take the whole headache of maintaining it. Secondly, the risk that it adds, and thirdly, the flexibility, right? So I think over a period of time, you may just find people start using serviced apartments more. People start saying, you know what, okay, let me just rent out, let me not buy. We're finding a larger number of people today with a wider exposure to all assets, okay, say I don't want to buy a property, right? It may not be true in the higher age groups, where you've come down over the years, but today I think millennials are willing to question those the past dogmas that we have, okay, and say yes, let me do what is financially more better, because today maybe the internet and the information that you get is a leveler. So there's a lot more information, and people have tried out various things. They've tried out higher risk, and even over a period of time, I found people even at 40 years, if they have been exposed to various assets, some of them choose to say, I will not buy a property.
Fair point. But how do you get around the emotional aspect of it, which is that niggling issue of security? You are living on rent. There is a feeling that that rent is, down the drain because it's not really creating any value. And there's also the aspect of, if I lose my job and if I don't have an income, assuming that I own a property, that property will give me the security to say that, okay, I have a window of 6 months or 1 year before I can yield something again, I can earn something again, and I have that security. How do you get past that?
See, I think over time, I think as the economy matures, right, some of the decisions may come in a little more easily as well. Okay, because if you see, maybe in countries like India, real estate is a much higher portion of one's asset. Maybe in more developed countries like the US and UK, it is sort of a lesser proportion, and they may even invest in real estate as a financial asset, right? So it could mean that I look at what is sort of yielding me more, because you just look at it this way. One is I stay in a rented house and I invest in let's say a fund which invests into commercial real estate and gives a 5-7% yield, right? That will be far superior than going and buying the rent, and invest, taking a property on rent, or sorry, buying a property and taking the EMI. So that, I think, as time goes by, it will evolve, and people will see for themselves. Because even today, I'm saying certain aspects, like if you go to the US, you cannot even think of just living your retirement off and fixed deposit or debt avenues, right? So I'm saying these will change here as well when sort of interest rates come down, okay, and you find that financial assets do better, okay, and as there's more exposure to various asset classes for people, I think that's something that will change.
One last point, and we spoke last week when the Reserve Bank of India had that off cycle rate increase. And I know that in your example you had 7.5%, which is accurate if you talk about the repo at where it is right now, because 40 basis points is the increase. One would assume that housing loans right now are available at close to that level. But we're talking about the possibility of another percentage point from this point to March 2023. So by next year, this time, one could see housing loans at 8.5%, or maybe at least over that 8% mark. Is now definitely not a good time in terms of the interest cost to buy a house?
No, still, at this point of time, I think the interest rates are still lower than the past, because we've seen 9, 10, 11% in the past, right? So it is still much better. Okay, yes, what it does, even to the equation, that I captured, say 7.5% as an assumption, right? If that goes, higher, then it'll make your investing in real estate even worse, right? So it definitely does have an impact. And our view also is that interest rates should, continue to move higher. I'm not sure it'll move up 1% in a year, because sometimes it moves in a little bit of fits and starts, okay, and you'll see already there's pressure on markets, and then RBI may just end, the other central banks may go a little slow on further rate hikes. But yes, over a longer period, maybe over 2 years, going past 8 for a home loan, or even going to 8.5, cannot be ruled out.
I think we've covered all the bases. Thank you so much, Anil, for taking the time. Appreciate speaking with you.